Hey everyone, welcome back to another episode of the Daily Gold podcast. We are recording this on the morning of Monday, June 3rd, 2024. But for our next guest, it's actually the evening of June 3rd, and he is a very special guest, Dr. Marc Faber. He is the publisher of the editor and the publisher of the Gloom Boom Doom Report. You can find that at gloomboomdoom.com. Of course, for all you listening, Dr. Faber, he doesn't really need that much of an introduction. He's a living legend. But Marc, I want to respect your time and get right to the interview. First question for you. Can you just give me like maybe a 50,000 foot view of markets and what you think is going on? I mean, I specifically, I'm thinking about, you don't normally see stock markets at all-time highs and gold at all-time highs at the same time. So I don't know if you want to, use your knowledge of history to speak about that, but at least in recent decades, we haven't seen things like that.
Yes, I think we live in some unusual times. We have also unusually bad politicians. This is, by historical standards, must be a record. The sort of poor bureaucracy that we find in countries like Canada, the US, Germany, and so forth, that have led actually prosperous society into economic decline and diminishing standards of living. That is quite unique to have this ability to be this useless. So this is my political view. We are burdened with very bad politicians. And in historical terms, bad politicians all print money. And so we have had considerable money printing over the last 40 years. And we have the symptoms of inflation that occur both in terms of rising consumer prices at times and also rising asset prices at other times or at the same time. So as you pointed out, you have gold close to a record high now, and you have stocks at the high. But when you talk about stocks, this is, of course, an American view to say the market is at the high, because most markets in the world are not at the high. Most markets in the world are significantly below their highs. And even in the US, most stocks are significantly below their highs that they reached. I don't know, some stocks reached the highs in the year 2000, some in 2008, and some in early 2021, the SPACs and the meme stocks and so forth. And most stocks in November to January 2021, January 2022. But the market, the indices are at the high because an indices consists of, say, in the S&P 500 stocks, and in theory, 499 stocks could be down, and one stock could be up strongly and drive the index up. So it's not a very good measure of, say, the performance of diversified portfolios. Also, you mentioned markets are at the high. Yes, stocks, but not bonds. Now, there may be a reversal where stocks go down and bonds rally and so forth. These are all the challenges that we will have to face in the years to come. But one overwhelming challenge is, of course, as I said at the beginning, the poor quality of governments. But the governments, in theory, they can change. The tragedy is that the voters don't change. We should change the voters. We should change the system that only, I don't know, educated people can vote, or small businessmen, not, or that social security recipients cannot vote. Maybe that would be a start.
Right. When you talk about printing money, just a big picture general question for you. because, from the point of view of, the elites, or, the Washington insiders and the people in New York City and the big cities, they look at their brokerage statement, they're happy. So they don't think about, oh, there's printing money, there's inflation. Do you think, like, are we getting closer to the point where that we're going to be printing money, but the impact of that is going to be negative? Like, in other words, we're going to see money printing, but then the stock market won't do as well. The money printing will cause, inflationary assets to do a lot better, which is worse for the economy when you higher consumer prices. That's just something I want to get your view on.
That's a very interesting question. As you say, the elite, including, I don't count myself to the elite, but say I benefit from higher interest rates because in my business, I have large cash deposits, I have money that I roll over in a bond portfolio. So in the years 2015 to 2020, with interest rates around zero, it was a very bad time. Now I get, like, on deposits 5% tax-free. So, the elite benefits, as you say, from inflation. Real estate goes up, stocks go up, and they can invest in all kinds of ventures and so forth. But one crack has appeared, and that is commercial property. It doesn't touch individuals that much because commercial properties are mostly owned by institutions, pension funds, including government pension funds. But you understand, the pension fund industry, by and large, is grossly underfunded. And so the commercial real estate, depending how much they have in commercial real estate, is becoming a drag. And higher interest rates, the very wealthy people, they have no debts, they have net cash. But the middle class and the upper middle class, frequently they're indebted because they bought the house and borrowed money. And some were wise and they have fixed interest mortgages. But as you know, in Canada, as an example, you don't have fixed interest forever. You can fix it, I think, for 3 or 5 years. So the higher interest rates have begun to hit some people, and and the inflation has hit the consumption of the lower classes and middle classes. And the rich people, they own these companies like Walmart and so forth, but they're going to feel the impact of essentially constrained consumption.
Right. So do you think that commercial real estate could be the chief cause of the next downturn here in the West, or could it be something different, a combination of factors? I know it's hard to predict, but just give me your sense of
Well, my
what you're
sense
thinking.
is it depends. GDP is a very bad measure of economic prosperity. In America, approximately over 70% of people, they live paycheck to paycheck. In other words, they need the paycheck to pay the bills of what they incurred. In my book, someone who lives paycheck by paycheck is living like a slave and has no money. He has no freedom. So this is a very bad condition to be in. If I observe the statistics and I observe ordinary people, how they live, I'd say 80% of Americans, they have a lower standard of living today than 20, 30 years ago. Same for Canadians. And, the situation is like this. The governments, they could take some measures. They could increase taxation to bring down the deficits. They could default, and they can print money. Printing money is a tax. Printing money with fiscal deficits at the same time, for sure, will lead to inflation. This inflation is a tax, but people don't see it, obviously, as a tax. And the rich people, they benefit from it, as you say.
Right. But to go back to my question, like, could we go into a new era where the rich people start to actually get hurt by the inflation?
Yes, because my theory is inflation and interest rates move in long-term cycles. I don't want to go back to the cycles beginning in, say, 1798, but let's start after the Second World War. Inflation gradually accelerated in the 50s and accelerated in the 60s, especially under Mr. Johnson when he had this butter and gun policy and created deficits and so forth. And the inflation then peaked out in 1980-81, as well as interest rates. The bond market interest reached the highest, over 15%. I remember putting money on deposits in American banks at over 20% in 1981. After that, we have a down cycle in inflation and in interest rates that came to an end, like in 2012, 2015. But it was artificially prolonged, this decline in interest rates through monetary policy by the central banks. So we had interest rates reaching a low of 0.57% on the 10 years in May, June 2020. So less than around 0.5% on 10 years treasuries in May, June 2020. Since then, and I think this will last for the next 20, 30 years, a rising interest rate cycle. Now, if you look at the interest rates movement in the 70s, sometimes interest rates went up and then they were cut in half and then they went up and reached new highs. So I think we reached a high recently of over 5% on the 10 years. We could drop to 3%. It's possible. But the long-term trend, in my view, is upward, massively. Okay. If you look at countries like Turkey, Fitch, the rating agency, just gave them a higher rating. They have inflation of around 100%. Argentina and so forth. You go to these countries, people walk around, the markets are open. We could go into the US, in my view, into very, very high inflation. None of the politicians has any will to reduce the fiscal deficit. None. No politician in America can get elected if he goes to the voters and say, look, we have to tighten our belt. None will be elected. The electorate want a liar like Trump or Biden or whoever who says, we are the greatest country in the world. We are the richest country in the world. We need to create even more deficits. And we need to send a few rockets to Moscow.
Yeah, it's getting really bad. But given everything you said, I'm thinking about the S&P 500, had this bottom in 2009. So it's in a secular bull market since 2009.
Yes.
When do you think the secular bull market in the S&P is going to end? I mean, is this something that could continue for another 5 years or a decade? Or do you think like in the next couple of years, like it's in trouble when we have this downturn?
Well, I think the typical stock has already reached a high, but there are many good books about inflation and the impact on stocks and so forth. You understand, we have to distinguish between the real price and the nominal price. I could argue in nominal terms, they print money in the US. The S&P could keep on going up and up and up, and the currency could keep on going down and down and down. Now, the currency is the question because most people identify a currency as the euro or the Singapore dollar or the British pound or the Japanese yen. They never think of gold, silver, and platinum as currencies. And if you want to protect yourself you may be jumping into a bigger problem by owning yens than US dollars or owning euros than US dollars. I don't know. I'm just suggesting. But the one thing I know is that over the last 200 years, gold has appreciated slowly against the value of paper money everywhere, not just in the US, everywhere. Now, there were periods of interruptions, 20 years between 1980, when it peaked out at $850. Then it went down to $299 in year 1999, at which point the media, of course, the Western media is always against gold because gold is honest and politicians are liars. That is the basic equation. Gold is honest, politicians liars. You want to be with the liars in your investments, or you want to be with the truth, which is gold. But the media, of course, they're with the politicians because they get paid from the politicians and receive favors and so forth and so on.
I want to talk. Thanks for mentioning gold. But before I get to gold, specifically, like, let's think about the comparison between the S&P 500 and gold. Because when we look at that relationship, like if you're looking at gold divided by the S&P, that's gone sideways for 5 years, basically. I mean, it speaks to what you're saying, that in real terms, the stock market hasn't really done that much because it has been sideways against gold for, 5 years or so. Do you think we're getting really close to the point where gold will actually start to really strongly outperform the US stock market? Because it hasn't quite done it yet.
It hasn't done it yet because gold is relatively high compared to other commodities. You understand? But I think in real terms, inflation adjusted, I think the stock market in America, inflation adjusted, peaked out in 1966. And in 1982, the stock market was about the same level as in 66. It was a bit lower. But in real terms, it was down 70%. Real terms, inflation adjusted. I think the same will happen now.
Yeah, I've looked at some charts. In 1982, the inflation adjusted, the stock market was in the toilet, inflation adjusted. I think you're right.
Inflation adjusted, it was at one of the lowest level ever in history.
And I just, maybe you can add a point or two. And so you're talking about these cycles. So I think based on what you're saying, people need to understand we're in a new cycle for higher interest rates and inflation. And, some people, the people on TV, they might say, oh, this will be 3 years, inflation's under control. But based on your study of history and your knowledge, Mark, I mean, you strongly believe this is something that could run for a couple decades. Like, we haven't seen anything yet.
Yes, I tend to subscribe to this theory. We haven't seen anything yet in terms of how high and how rapid prices could escalate. Because if I look around, I'm one of the few people that has been criticizing the Federal Reserve and other central banks for at least 30 years. But where are my friends who criticize the central banks? Nowhere, because they're in the financial sector. They benefit. They want money printing because the money printing boosts their portfolios. The fees go up. So no Wall Street bank or the brokers or investment bank will really attack the Fed. They feed on each other. They are friends. The Fed is the greatest friend of Wall Street. The Fed is not the friend of ordinary people, of the working man. The Fed, the central bank, is a socialist institution because it allows government spending to grow and grow and grow. And the cancer spreads. And as the cancer of socialism spreads, economic growth goes down, which then requires even more money printing to kind of maintain the illusion of wealth, the illusion that everything is well. But all the statistics I look at of that show the standards of living of ordinary people, spending pattern at Costco or at Dollar General or at fast food. Now, for many families, eating in a fast food shop is a luxury item. This is the reality. But the reality is not told by Wall Street and is not told by the media and not by the government.
That's why I love all your interviews. It's great to see you doing interviews like this, because we need people like you educating us on what's really going on. And that's what the
you're
smart people
educated.
are paying attention
But most
to.
people, Henry Ford already observed that ordinary people don't really understand what money is. And I have to admit, there is a big debate in academic circles about, things like inflation and the impact on this and that, and what is the optimal size of government, and. These are things that are being debated. But in my view, there is a lot of misinformation that is brought to the people in order to keep them sort of happy, not that they get too depressed. And the money concept is very complex. For instance, I am told that Bitcoins are like money, but are they included into the money supply or not? No. All these things is the world has created a money system, a money bubble that is a multiple than the real economy. It's like the option trading is a multiple of what stock trading is. Now, how the academics, in my view, don't know exactly anymore what money is. They don't know exactly what liquidity is, because the Fed says, well, we tightened monetary conditions. Interest rates are at, say, the Fed fund rate around 5.25%. But is money tight? Why is GameStop suddenly up 100% overnight? Is that a symptom of tight money? No.
Mark, I want to talk about fiscal stimulus and government spending. Do you think we are going to see more of that during this new cycle of inflation and higher interest rates? The government spending more money on projects, or even giving it to people, canceling debt. And if so, I guess secondly, I would say, is that also, has that been a symptom of past inflations going back the last 200 years, where at some point in the cycle, governments, they just directly start to give money to people?
Yes, this is a very good point, because I think giving money to people and subsidies that corporations get is basically nothing else than vote buying. You're an immigrant, legal or illegal, you come to the US, I say, I give you money. You don't need to work. Work is for us white people, the idiots, not for you, who are welcome to our country. And the subsidies, you buy entire companies by giving them subsidies. Do you buy the media? Just give them a subsidy. Are you ever going to write something negative against the people that feed you? Always look where the money flows. And that, I want to say, this is in social history, is very important to understand how socialism comes about. Okay, in some cases, socialism, communism came as a result of a revolution, like in Russia. It was a complete disaster, but for the socialists, it was a great victory. Complete economic disaster with famine and everything. Horrible years. In America and in Western Europe, socialism comes slowly. And the main reason, in my opinion, is the indifference of the elite or the ruling class, the entrepreneurs, because the entrepreneurs, they look at the social movement, say the BLM bullshit. Then BLM comes up the corporations, they don't like BLM, but they give them money. So they're not being targeted by these people. They may not agree with them, but they give them money. They're like blackmailed. I had a dinner with one of the leaders of the AfD party in Germany, not because I have great sympathy for any political parties, but I was just interested. And I said, you must have huge donors that give you money. He said, no, not at all. They're afraid. A lot of people are afraid to give to right-wing organizations. And for me, the right-wing organizations are not Nazi organizations and people, the extremist racists or the Ku Klux Klan and so forth. Not at all. They are people who are essentially have common sense and can add, do and do, and see that you can't always have a deficit and pile up on your government debt without causing long-term damage.
Mark, I want to get back to gold and precious metals. So with gold having this big breakout move in the last couple months, does that put it in a new secular bull market for you? I mean, how do you think about gold's recent price action in the context of a 30,000-foot view?
Well, as you know, gold was at $30 in 1970, and then after 71, when the US went off the gold standard, it rallied strongly in the 70s. And after 1980, it essentially didn't move. It fell until essentially year 99, 2000. Then we had a bull market until 2011, and since then it's been moving in a wide trading range, but sidewards. And my suspicion is that we are in an uptrend. I'm not so sure that the price will go up as much as some people think, because some people think it will go straight to $10,000, $20,000. I wouldn't know that. But the one thing I know with my, say, I studied economics, but I'm not an academic economist, although I read probably more books than central bank governors. But it seems to me that paper money is an instrument that can be exploited by ignorant politicians, but also evil politicians. So the solution to any problem is money printing. I'm not saying that every politician thinks that way, but it's an easy solution to solve some problems is to print money. Gold cannot be printed, but it can be taken away from you. So the thought is, where do I keep my gold and so forth? But there are ways to keep gold away from governments, I hope. Although if a government bureaucrat comes to your house and puts a gun on the head of your girlfriend or daughter or whoever, or your own, and says, where is your gold? If you don't tell me, I shoot you. I mean, maybe I would tell him. That's why it's always important to keep various accounts. When this situation arises, you tell them the small account.
Mark, how do you think this gold bull market, I mean, how is it going to end? Because it doesn't seem like it's going to end in 1980, where they can, raise interest rates to a certain level and make paper money attractive again. I mean, do you see this ending with some kind of new gold standard? Gold is reintroduced as money, or I mean, what's the end game for all of this?
Actually, we don't know precisely what the end game is, but I'm not interested precisely in the end game, because I live now and I want to live now. So I play the game now, and I've played the game for the last 40 years at least. I've been accumulating gold every month, and I don't even value my gold in my portfolios, but I have it in my heart. That sounds stupid, but I always say to myself, of course, if one day I cannot have access to where the gold is a problem. But I always tell people you should keep some gold where you are. It's like you should keep some cash where you are. Because if the next war is a cyber war and they switch off the electricity and the lights, then your credit cards will not work very well. And your bitcoins, when you go to the supermarket, will not be accepted. You understand? You have to have some common sense. In an extreme situation, nothing works. But the batteries may still work of your light. And if you can show a gold coin to the taxi driver, he may believe you that it is gold because he can weight it. If you show him an account with bitcoins, he says, fuck you.
Marc, before I let you go, last thing for you, silver. How are you thinking about silver right now?
I like silver, actually, from a technical point of view. I think it is in a better position than gold. And the cheapest is probably platinum. Is also the metal that is not talked about much. And I think occasionally platinum sells at the premium to gold. Now, the bulk of platinum is produced in South Africa and Russia. And a lot of people believe World War III has begun. It's not necessarily my view. But I think if I look at Ukraine over the last few years, how it's developed, it's actually escalated. And the war is no longer about a small territory in Ukraine. In my view, the dumbed down Western government against the interest of all the people who live in the Western world. Western world people don't want the war, but the government's officials want to go to war. In my opinion, there are some elements in America that want to destroy Russia, period. They're not going to succeed, but they can try. They can read the history of Napoleon in Russia and the retreat over the Berezina. And they can read about Stalingrad. But they're enthusiastic. But these neocons are very enthusiastic people when it comes to going to war somewhere. For now, nothing ever is achieved.
Okay, Marc, on that note, I'll let you go. Thank you so much for joining me today. A big fan of your work. My audience is a big fan of your work. Really appreciate your time. And everybody, you can follow Marc at gloomboomdoom.com. Dr. Faber, I hope we can do this again later this year, next year, see how things are progressing.
But as you know, as a contrarian, popularity is very bad. But nice talking to you. And as I said, I wouldn't own any gold just because it will go up $100 in the next 3 days. I would own gold the way I am a Christian. You know, I have a Christianity and education in Christianity. And I'm not saying it's the optimal religion, but this is my moral standards are built around, say, Christianity. And it's a sort of personal philosophy that you cannot trust government officials. They don't work for the people, unlike what they broadcast every day. They look after their own interest. Mostly they steal and cheat and lie. And gold is a relatively honest type of commodity, provided it's real, not a fake gold piece that you buy on a street corner.
Thank you for tuning into the Daily Gold podcast. For more interviews, editorials, and analysis, log on to TheDailyGold.com. And for premium coverage of precious metals and the best junior mining companies, visit TheDailyGold.com/premium.